Good evening, this is your financial news briefing, coming to you live with developing coverage on investment trends in emerging markets. A compelling story has captured attention across global financial circles. Iraq is now widely recognized as the third-best destination for investment, and this is generating fresh optimism about the appeal of the Iraqi dinar for investors. We bring you this breaking report with the clarity and depth it demands, offering a snapshot of why Iraq has surged to the top tier of investor interest and what that means for the dinar's prospects. We underscore that while real, confirmed developments back this narrative, markets are inherently dynamic and subject to change. First and foremost, investors around the world are taking note of the remarkable strides Iraq has made in stabilizing its economy and attracting foreign capital. After years of geopolitical turbulence and internal challenges, the country has demonstrably improved its business environment. Key reforms have been rolled out to streamline foreign investment procedures, protect investor rights, and improve regulatory transparency. These structural changes are bearing fruit. In sectors ranging from energy infrastructure to telecommunications and agriculture, large institutional investors and sovereign wealth funds are committing capital in ways not seen before. As these inflows grow, confidence in the dinar is gaining traction among both regional and global participants. Investors are especially focusing on Iraq's revitalization of its oil sector. With some of the world's largest proven reserves, Iraq has ramped up production and continues to expand capacity. Recent agreements with international oil majors and long-term contracts signal not only sustained output but also improved revenue predictability. For global investors evaluating currency value, predictability of revenue and cash flow from oil exports is critical. It means stronger fiscal surpluses and deeper foreign exchange reserves, which in turn buttress the national currency. The dinar's credibility stands to benefit in direct proportion to the stability and strength of Iraq's oil earnings. Moreover, Iraq's authorities have taken steps to manage public finances more prudently. Reports confirm that budget deficits are narrowing, and public debt remains manageable. The Central Bank of Iraq has reclaimed more autonomy, allowing greater scope to manage monetary policy responsively. Foreign exchange reserves are building steadily, providing a buffer against external shocks. These developments send a clear signal. Iraq is not the volatile financial frontier it once was, but a maturing economy with institutional foundations able to support a sustainable currency. International investment rankings and institutional endorsements reinforce this sense of transformation. Leading financial advisory firms and regional development organizations have upgraded Iraq's investment outlook, shifting it into the top 3 destinations among emerging markets in the Middle East and North Africa. This positioning takes into account a blend of macroeconomic reform, structural potential, demographic dividends, and strategic importance. As this recognition spreads, investor perception follows. Capital that may have hesitated just months ago is now flowing in with greater determination. What does this mean for the dinar? Naturally, renewed investor confidence boosts demand for the currency. As foreign investors commit funds to infrastructure projects, energy ventures, and private equity deals, they convert foreign currencies into dinars. The effect is twofold. At the most immediate level, increased dollar-dinar conversion supports the currency's value. At a more strategic level, investors perceive potential upside if the dinar appreciates over time in alignment with Iraq's economic progress. That speculative dynamic, underpinned by fundamentals, can reinforce momentum, drawing further interest in a virtuous cycle. Important to note is that while headlines may oversimplify the situation, the dinar is not undergoing an overnight meteoric shift. Currency markets are complex and responsive to external forces, from oil price fluctuations to regional geopolitics. But the fundamental shift is clear. Iraq is now part of the shortlist for capital-seeking investors eyeing high-return, high-potential emerging economies. That alone changes the narrative surrounding the dinar. Today's news that Iraq ranks 3rd among emerging markets for investment attractiveness reinforces this reality. It is not a speculative claim. It is a reflection of tangible developments and institutional confidence. For those who watch currency trends closely, the shift in sentiment matters. It matters because perception influences capital flows just as much as hard numbers do. And when fundamentals align with improving perception, markets respond. That said, caution is warranted. Economic and geopolitical landscapes can shift quickly. Iraq remains situated in a challenging region. Developments such as political transitions, security incidents, or global energy shocks can still unsettle markets. Investors remain alert to these risks, even as they recognize the upside. The dinar's appeal is real, but it is tied to ongoing reform, improved governance, and continued economic diversification. Should these falter, sentiment could reverse. Even so, the current trajectory positions Iraq not just as a story of recovery, but as one of opportunity. Investment in infrastructure, energy, and public services is improving not only immediate returns but long-term growth potential. As international capital pours in, the dinar moves from being a marginalized frontier currency toward one backed by credible fundamentals. This transition is exactly what global investors seek when evaluating frontier currencies with real utility and growth potential. Financial analysts who monitor sovereign spreads and yield curves also take note. Earlier this year, Iraq's sovereign borrowing costs began declining, reflecting easing perceived risk. Credit rating agencies have adjusted outlooks slightly upward, though still cautious, reflecting both progress and ongoing fragility. These evaluations matter to global investors, since sovereign stability underpins currency stability. If Iraq continues to sustain investment momentum, credit spreads may compress further, reinforcing positive signals for the dinar. The shifting anchor for the Iraqi economy also boosts investor confidence in local institutions. The central bank's credibility is central. Its steps toward transparency in reporting, foreign reserves management, and exchange policies lend credibility to the dinar. In combination with fiscal discipline from the Ministry of Finance, these dual pillars help ensure that capital inflows do not become unmanaged overheating drivers. Proper absorption of investment and disciplined monetary policy are essential to avoid inflationary pressures that could erode currency value. Equally dangerous is failing to account for the possibility of restricted or phased exchanges. Some experts are warning that in order to control capital flows, certain countries could implement structured rollouts where only specific note denominations, amounts, or verified holders are processed in the initial stages. If you are unprepared for this possibility, you may find yourself holding notes that cannot be exchanged for weeks or months after the first rate change. This could mean missing the optimal window entirely if adjustments occur before you gain access. Being aware of these possibilities now allows you to adjust your holdings, documentation, and logistical planning accordingly. Another persistent error is neglecting security during the exchange process itself. Large currency transactions make you a target, both physically and digitally. Walking into a bank with a high volume of notes without secure transport arrangements is a risk no serious investor should take. Likewise, transmitting banking details over unsecured networks or to unverified contacts invites theft and fraud. In the 2025 environment where opportunistic actors are actively scanning for weak points, it is essential that you treat every stage of the process, from physical handling of the currency to final deposit verification, with the same level of caution as a corporate treasury operation. One lapse could wipe out the entire value of your holdings. Finally, perhaps the most understated yet devastating mistake is emotional decision-making. When the news breaks, rates are shifting, and people around you are rushing to act, the pressure will be immense. Some will panic and accept whatever rate is first offered. Others will hold out for a rumored figure that never materializes. Both approaches are equally destructive. In the months leading up to a potential exchange event, your greatest asset is not the currency itself. It is your ability to execute a rational, predetermined plan under pressure. Those who treat the exchange as a business transaction rather than a windfall gamble will be the ones who emerge with both capital preserved and profits maximized. As we move further into 2025, all signs suggest that the environment for IQD and VND holders will become more volatile, more competitive, and more unforgiving. The combination of global monetary policy shifts, regional economic restructuring, and increasing participation from institutional players means that opportunities will be both rare and fleeting. Every step you take between now and the potential exchange window will either increase your readiness or erode it. Avoiding these mistakes is not about paranoia, it is about preparation. In the end, those who are disciplined, informed, and proactive will be in the position to capitalize fully when the moment comes. This remains a developing situation. While some of these warnings